GETCRACK. Wake up, motherfucker.
We begin to close out a record year for the ETF industry. What bets are investors making for 2025? Let's talk with Brian Hardigan. He's the global head of ETFs at Invesco, fourth largest ETF provider in the country, and with Nate Geraci. He's from the ETF store, my old friend. Brian, the hot topic, I got to start with Bitcoin ETFs and what's going on with that. They've now passed $100 billion in assets under management. That's all 12 of them, including yours, BTCO, the Invesco Bitcoin ETF. I think you have nearly $1 billion in assets in that as well. So tell us about how momentum in Bitcoin ETFs and what's happening as we close out the year.
Sure. Well, you've seen it just take off from early 2024 when multiple issuers launched, right? So really creating the packaging, the regulatory support, the liquidity of the ETF vehicle, pushing Bitcoin forward. But I think over the last few weeks, you've seen obviously the regulatory regime and at least the outlook for 2025 become very conducive for digital assets and certainly Bitcoin ETFs. So we think there's another chapter here that we're starting to enter, and we're looking forward to how investors can leverage option markets and other liquidity access to really manage their exposure.
Yeah, I want to talk about 2025, but Nate, something really extraordinary is happening with these Bitcoin ETF flows. These 12 Bitcoin ETFs now have, they're now the largest holders of Bitcoin here. I saw 1.1 million Bitcoins held in total, and I think that's relevant because that, we believe, passed Satoshi Nakamoto's 1.1 million Bitcoin holdings. And by the way, we don't know exactly who he is or how much he holds, but the estimates have been as high as 1.1 million. But Bitcoin ETFs now are collectively the largest single owners of Bitcoin. Tell me a little bit about what you're thinking. Why has Bitcoin ETFs become a preferred way of holding Bitcoin?
Well, first of all, I don't know that this is exactly what Satoshi had in mind when he created Bitcoin, to have Bitcoin held via some of the largest asset managers in the world. But here we are. I want to go back. When you look at this category overall right now, last I checked, spot Bitcoin ETFs are nearing $110 billion in assets overall. And they've done this in about 11 months. For context, the physical gold ETF category, which has been around for over 20 years, that has about $125 billion in assets. So it's not inconceivable to think that spot Bitcoin ETFs will surpass gold ETFs sometime over the next several months, which is just astounding when you think about it. When I think about the demand here, I think everything lined up perfectly for these products coming to market, because remember, you had over 10 years of pent up demand here, because the first Bitcoin ETF filing was all the way back in 2013. And this has been talked about ad nauseum over the past decade. So I think that created a lot of pent up demand. As we talked about earlier, Bitcoin itself has obviously performed very well. It's up around 140% this year. That clearly helps. There's just been a ton of coverage in this space. That helps generate investor interest. So all of the ingredients have been there. It's really been a perfect recipe.
Really, it's been remarkable, Brian. Tell me a bit about Paul Atkins. He's the nominee for the SEC chairman. How are they being viewed in the ETF community? I know the Bitcoin community thinks Atkins are positive, but what about the ETF community?
Absolutely, yeah. I think it's been known that he's been a supporter of Bitcoin, and I think 24 was really the point at which you break out, right? And I think, again, as I mentioned, the next chapter, hopefully the ease of bringing new ideas and new opportunities for the asset class is what we're going to see 25 and beyond, whether that's reserves, access points, or additional liquidity vehicles. I think that's a huge opportunity for the asset class.
What about institutional community? Is there hope obviously there's a lot of barriers still up about owning that. Is there any sense that might change?
Yeah, so if the ETF becomes the liquidity vehicle for holding the digital assets themselves, it's a known vehicle, it's liquid, it's regulated, and I think that really touts the benefits of the ETF. So hopefully that's the kind of that intermediary vehicle that we needed to give the institutional marketplace more access to digital coin.
Yeah, Nate, he mentioned here, Brian, briefly, there's this entire huge complex around Bitcoin now, from options to income variance. Riff on that for a moment. Why has Bitcoin acquired such an aura in the American mindset? I mean, Jay Powell has said it's primarily a speculative investment. Is that right? Is it essentially a get-rich-quick scheme, or does it have another kind of use case?
Well, I think if you look at the demand overall, investors are clearly viewing this as a viable store of value and something that is an asset that is here to stay. And when I think about the ETF specifically, I think that's indicative of a shifting regulatory landscape, which has given investors and in particular advisors and institutional investors much more confidence to come into the crypto arena. And then you look at how the ecosystem is developing around Bitcoin and in the traditional finance space with things like options coming to market. I think we're going to see a proliferation of ETFs that play on Bitcoin. We're going to see buffer defined outcome Bitcoin ETFs. We're going to see tail risk hedging Bitcoin ETFs. We're going to see all flavors of ETFs coming to market. And, going back to the regulatory environment, I do want to make a quick note on that, and that by all accounts, the Trump administration is going to take a much friendlier approach to crypto. We're already seeing that with the establishment of a crypto czar in David Sachs. Paul Atkins is set to succeed Gary Gensler as SEC chair. He's viewed as being much more crypto friendly. So the overall regulatory backdrop has turned much more positive. I think you're seeing that reflected in crypto prices. You're going to see that reflected in a proliferation of crypto ETFs coming to market.
Yeah, I mean, Brian, regardless of the use case, your point before, there's this huge complex around it now. Options to income variance, for example, that's going to keep expanding.
Right. Yeah, I think the big next wave is the wealth channel, right? So advisors have asked us, how do I use it? Where do I allocate it to? And we've helped them with some of the research. I think, as Nate had mentioned, when you look at it as a storage of value or compare it to gold, but if you add up all of the assets in the investable market, including Bitcoin, you're right around a 50 basis points to 1% allocation, right? So for people asking that question, if you don't own it, you're 1% under allocated to Bitcoin. So that's kind of been the initial wave of getting investors to allocate within their portfolios. But then as the options market and derivatives start to come out, there's ways to manage around the volatility, right?
Your point is 100 billion is roughly 1% of the $10 trillion in ETFs.
Fully investable market, correct,
yeah,
yep.
Yeah.
All right. It is December 10th, 2024. We got 4 minutes till the market closes. Okay. So, what is the game plan before CPI tomorrow? CPI is tomorrow. Very big deal. I'm going to say we'll have to wait and see how it's going to be. Because if the small caps continue up, very good sign. And then I'm waiting on Avago's earnings on Thursday. So after the close on Thursday to see if it holds up the NASDAQ. But we still have to wait for Powell. Powell is next week. Next week on the 18th, a very important thing. So I wouldn't doubt there would be a lot of adjustments going on next week. Maybe starting on Tuesday. So 1 week from now. So if Avago does well, CPI does well, and we continue back up, then yeah, get ready for Tuesday. Tuesday, Wednesday, and Thursday. So 17th, 18th, and 19th of December. I think those 3 days, yes, very critical at this point. But if things start falling tomorrow, then I'll change my mind. That's a dip I'm waiting for. So I'm waiting for my dips right here. So like I said, on the weekend, Sunday night, I think, I was talking about, okay, I'm going to sell my SMCIs, most of it. So that's what I did yesterday. But it didn't get over 50 during the day, so I kept a little bit of the SMCX, that leverage. But I took my cash, and I see a lot of dips now, right? Bitcoin tried to go to 100K again yesterday on the open and went back down. So I'm going to show you a chart. And the reason why I started with that video on the ETFs is like you can see right away that Bitcoin the way it moves really respects when the futures markets open and close, which is a known thing because the futures market had Bitcoin since I think 2018 or something like that. And then now you see with all these ETFs, you see the Bitcoin, they respect when the market opens and close. So these ETFs have a lot of influence over Bitcoin. All right. Actually, they had two tables there, which were very interesting tables. I'll probably have to replay that video and go to that point. But let's just look at how the market is for Bitcoin right now. Oh, and GameStop is going to have earnings after the close. So let's see. Right now, GameStop is down 3.72%. Let's see what my gambles will give me, because I've been waiting for this since I got in around 23s, and I've been adding since then. It's like, well, do or die. Either I get some money or I don't. This is the lottery. Usually I won't play earnings, you know that. But it's the New Year's. It's going to be the New Year's pretty soon, so I might as well see what happens. Maybe I'll get a pump. And then if I get really lucky, tomorrow, if the CPI does really well and small caps rises, ooh, and GME, GameStop, being one of the biggest of the little caps, I believe they got added to the Russell 2000 some time ago, or they got took off the Russell 2000 and added somewhere else to the mid caps. I don't remember. One of these stocks did that. One of these little meme stocks did that. I forgot which one. All right, market's closed. Okay, let's see how it's up. Now, if you look at Bitcoin, let's look at Bitcoin. Let me do this. Now, you see this? So this was Sunday night. See that? It tried to pump into, right, up into the open of futures and then crash. Right through that resistance, 1,000 right there. That's it. So it goes up to that resistance, crashes right through that support area, and then that's it. We're done. So 101,300 was a resistance right there, down. And then for the most of the night, goes down, down, down. You see it tried here in the middle of the night. This huge green candle, and it just couldn't, right? It just tries to take over, and then red candles right after. So then it tries again just before market opens, right? Pre-market, up, 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 up. And then the New York Stock Exchange opens, runs right up to it. 100,000 this time is the resistance. Crash. Goes down, 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 down. So every time you see stuff like that, you have to understand, like, these things. Yeah, this is a distribution structure. So you saw this last week when you had this huge buying up here, and then you tried to get into Friday. And then when we went to the weekend, quiet, 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 and all the activity starts happening again when, you know, the rest of the market is open. So this is where you see most of the activity now. So everything is into that. And then what happened yesterday is go into the closing of the NYSE, and then you have all this buying come in again, and then now it stops it, right? It stops it for a while. And now we go back here, market opens, tries to take over, but it can't. We're going back to this area here. These two pink lines, 95,600, 96,300. This is where the 50-yard line has been for Bitcoin since here, November 20th. So this area here is where all the activity keeps coming back towards. Every time we keep getting above it, we come back towards it. Now, the problem is, you better hold it this time around. We've been hanging around here way too long. This is it. So on Sunday night, I said, well, Bitcoin better make it here. If it does, then my target is around 112. So 112,000 maybe. So basically 110 to 115,000 by Friday. If tomorrow that CPI does really well. This is what I'm waiting for. Now, if it doesn't go well, then all bets are off. Then forget it. Then you're basically waiting for Powell, and you're not going to get that big bump before Powell speaks. So everything then hinges right on Powell again, alongside with the rest of the stock market. So that's a really big question mark that you don't want to be in. You rather be pumping right now into Friday. And then when Monday comes around, you got to watch it, because I think by Tuesday and Wednesday, yeah, you're going to have a drop into options expirations for the stock market. Bitcoin doesn't necessarily have to follow that. But like you saw the video, a lot of ETFs now have ton of Bitcoin. They are tied to it. So I think there's a huge influence on what stocks and bonds and all that does to Bitcoin now. It's all tied together very tightly. So let me play that video right back to that point.
So we think there's another chapter here that we're starting. I think over the last few weeks, you've seen obviously the regulatory regime and at least the outlook for 2025 become very conducive for digital assets and certainly Bitcoin ETFs. So we think there's another chapter here that we're starting to enter, and we're looking forward to how investors can leverage option markets and other liquidity access to really manage their exposure.
Yeah, I want to talk about 2025, but Nate, something really extraordinary is happening with these Bitcoin ETF flows. These 12 Bitcoin ETFs now have, they're now the largest holders of Bitcoin here. I saw 1.1 million Bitcoins held in total, and I think that's relevant because that, we believe, passed Satoshi Nakamoto's 1.1 million Bitcoin holdings. And by the way, we don't know exactly who he is or how much he holds, but the estimates have been as high as 1.1 million. But Bitcoin ETFs now are collectively the largest single owners of Bitcoin. Tell me a little bit about what you're thinking. Why has Bitcoin ETF?
All right. See that? So that's how many Bitcoins the spot ETFs hold right now. It just surpassed Satoshi Nakamoto's estimated holdings. Larger than Binance, the crypto exchange, larger than MicroStrategy's, Michael Saylor's, and larger than the US government. Now, what's more interesting is, let's go to the next one.
Has become a preferred way of holding Bitcoin.
Well, first of all, I don't know that this is exactly.
This one's really interesting. You see, the Chinese government owns this much. Then you have Binfinex, Block One, Kraken, and then Robinhood. So, I mean, that's not too much, honestly, with the governments, U.S. and Chinese governments. They probably just got it from taxation and confiscation anyway. But overall, yeah, Chinese and U.S. governments are probably the largest ones that hold some Bitcoin that they kept, right? All right. So here we are, flirting around 96,700 right now. We bounced at this last point of support, 94,800. Very important, because I do not think you want to revisit 92, 90,000. You don't want to go down there. Definitely not. Definitely not. Okay? Because that will really ruin all your altcoin season motivations right now. As you can see, you gotta hold that 95. You gotta hold it as long as you can. That's really how it is. Otherwise, there's no gambling in the altcoins. And if you look at Litecoin, now the reason I look at Litecoin, now I don't trade, crypto, so take this advice or prognostications or anything with some grain of salt. But from what I've seen in the past and present, it's always Litecoin kind of acts as a guide to me. It's kind of like gold and silver. Like I'm never confident that gold will have a good run unless I see silver at least be somewhat bullish. It doesn't need to be fully bullish, but I wouldn't trust a move in gold. So if Bitcoin is gold in the analogy, then Litecoin is the silver. So Litecoin being like probably one of the earliest, if not the earliest altcoins made after Bitcoin's creation. You see this on Sunday into Monday, very steep drop. Not very bullish. So if you want your other altcoins to be doing stuff other than dropping with Bitcoin, you better see this thing hold, really hold. And speaking of gold and silver, I think gold's perking up again. Gold, silver, yeah, silver's made it back to that 31, 32 area per ounce. Okay, so, and why is that? Because on Sunday night, actually, I was talking about China a little bit, and 2 hours later, stimulus. That's exactly what I was saying. Okay, because I was saying China is going to have to fight Trump, and what they're going to do is they're going to have to pump. They're going to have to pump their whole economy in anticipation of the tariffs. So they did that. So you had that huge announcement. So you had this really big knee-jerk reaction back up to the resistance here, about 21,000 on the Hang Seng. Now we pulled back yesterday night. So now I'm waiting, okay, because this is a nice base that formed here. So let's see if it holds here. And then we're going to have a tit for tat. So what's going to happen is you're going to see this where everything's going to be like bounce, 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 bounce. So every time China does something, Trump will do something, China will do something, Trump will do something. It's going to be like that. That's terrible for investing. And the thing is that this is not just going to be Chinese stocks. We're already seeing this with the semiconductors right now. You see semiconductors? So all the gains they made last week from the Marvell earnings, it just gave it all the way back. So we're going to go to some videos that talks about some of the news, okay? But first, let's talk about Reddit.
And Reddit's announcing a new AI-powered feature. Julia Borsten is here with a look, and the stock's been on a tear, Julia.
That's right. Reddit shares hit an all-time high earlier today, though have given up much of those gains. But the stock is still up a whopping 380% since the company's IPO in March. One factor driving up the stock, the promise in both search and in AI, which are coming together in Reddit's new product launched today. Reddit's debuting a new tool called Reddit Answers, which uses AI to enable Redditors to ask questions and receive answers from the platform's communities. Now, this is Reddit's biggest AI push yet, aiming to unlock the value of the conversations on its platform, which has been criticized for being hard to navigate. This new tool also aims to make Reddit a bigger player in search, which CEO Steve Huffman has said would be a key growth driver, saying that Reddit is an attractive alternative to Google search because the answers come from humans. Also today, Morgan Stanley upgraded Reddit to overweight with a price target of $200, saying, quote, given the quality, recency, and breadth of Reddit's data, improved search behavior could lead to materially higher engagement, time spent per user, and ultimately monetization. Morgan Stanley saying it thinks Reddit's U.S. ad unit pricing is still half that of its peers, and its U.S. ad load is at least 40% lower, so search could be a good spot for adding more ads. Kelly?
I've been very impressed with Reddit's rally, and I didn't know, Julia, how much of it was some of the licensing deals that struck with Google, if it was just old-fashioned user growth, that kind of thing.
Well, it seems like what they've really done here is continue to deliver on these partnerships, figuring out how to make that wealth of content they have valuable to potential partners, but also just doing a better job of monetizing on the platform. Seems like this next leg of growth is going to be driven by making Reddit easier to use, easier to navigate, and a big piece of that is AI. And search is incredibly valuable because not only if AI-powered search works, does that make it easier to drive engagement, but then also you have a new spot where you could put ads in between those search results.
Very.
All right. So let's see what Reddit got. So ever since the IPO here, $40, $45 about, they're pretty good. So from March 2024. So I've been pretty impressed by it. Pretty impressed by its performance. It's probably one of the best looking IPOs I've ever seen. Usually IPOs have a big surge and they'll just dump right away. That's not saying that Reddit will not dump right away, but you know, I mean, with the way things are going with AI, if you just need to say AI a few times, it's easy to pump a stock up. So I would say, especially with the software and all that stuff, that's really moving very well overall in the sectors right here, because let's look at the IGV. IGV is doing really well. Now, Reddit's not software, but it's adjacent. Because if we look at the XLC, so if we look at Reddit like a communication service sector, it's not bad, right? XLC is doing pretty good, especially today now with the Google announcement. Yeah, there's a lot to say about it. Now, I wouldn't be buying it up here, okay? But I'm looking at this dip right now. I'm definitely going to be watching this into next week. Like, if this thing drops to 120 or something like that, I mean, I might be aggressive and give it a shot for a long position. Maybe, okay? It's tough to say, though. We're going to the New Year's. I mean, I would rather personally, as a more conservative person, say I wouldn't take a really big position until I see what it does mid-January, after everyone takes their profits for tax reasons. But I'm definitely going to be watching it. If I see an opportunity, I might jump initially. Now, other long-term positions that I've been recommending is Boeing. Now, today we got some news. Boeing has resumed its 737 MAX production. So their strike is over. They're resuming production. So now we get this nice pump here on that news. So it's probably one of the few stocks that moved up and stayed up today. And it bounced nicely off of this low on the support. And now it's breaking out of that resistance. So the 139 support, 156 resistance. Now we're above it. Okay. So if you haven't got any yet, watch what it does around here. Very important. Okay. Now Intel, the other long position blue chip that you might be interested in, getting closer to go back here to that 19, getting very close. It's almost there. 1966 is the support area. So perfect, almost perfect. I think if we're not here already, we are already here. And that's one of the reasons, semiconductors have been down too. It's because Intel has been putting pressure. So not only the China stuff, now we got Intel stuff from last week. It's really like made this a dog. But overall, as long as we don't break this area here. So this is SMH 236. If we don't break this area for the ETF SMH, then we're fine. But it's all dependent on Avago, Broadcom. So AVGO's earnings on Thursday. So it will have earnings on Thursday. Now the other ETF is SOXX. This looks a lot worse. I mean, this looks a lot worse, right? Because it's not really a sideways. You see, it's been dropping since mainly since probably September-ish, but I would say, yeah, it really took the hit from Columbus Day. This really was it. And once you saw this, it's like, oh man, this sector sucks. So this used to be leading the market. Now it's just like blah, right? The only reason the NASDAQ has been going up has been software. And that's why on Sunday I've been really concentrating on telling you about Asana. So Asana, yeah, like you see this, like on earnings is pumping. So it's dropped today. I'm hoping it pulls back. This is something that looks really good going into next year. So these type of stocks and the other ones, Asana, what was the other one? DocuSign. Yeah, this man, this is such a dumb company, right? Yeah, you just do electronic signatures and you make a bunch of money. Yeah, see? So I'm watching this one. Let it pull back. It had a nice pump last week on earnings, 27%. Let it pull back. Let me see where it comes, and I'll get it. HPE also is a blue chip trying to break out too. So there's a lot of stocks I mentioned over on the Sunday stream. And you got to look at them. Reddit is something I'll add. And then we'll talk about Boeing and Intel as we get into New Year's. So a lot of you guys may be into longer term swing trading or investing. Those are the type of stocks you want to look at. Now, the riskier stocks, right? You had RXRX. Man, yesterday it was up 18%, but after a little while, it just pulled right back. You see that? Almost got to 10. And then it was like, nope, coming right back. So we end up right back to that blue zone, this whole rectangle. Ideally, we can finally get moving and go towards 15. But this is a much more riskier play, and it might just be a 2-week play. We might be able to get to 15. Now, once we get to 15, then you can decide, all right, can you hold it into next year? That's up to you. This is a totally different game once you get there. Like, that means you're really deciding that this is a big base, okay? You see this? This can be a really huge base. It gets up here, it stays between 12 and 15, 12 and 15, 12 and 15, and then boom, it continues onward. But that's a really big if, because small caps, they move fast, but if you think they're turning around to make a bigger move later on in the year, that's going to require a lot more convincing. Otherwise, it's just something really quick. You can just make a quick buck on, and that's it. So I bought this below 6, right? A bunch of them. And if it can hold here, I'll add before it gets to 15. Once it gets to 15, yeah, I'm out. But yeah, I'm looking to add to my position. So that's why I sold a lot of the SMCI yesterday, because I want to raise cash for this reason. Because if I see this whole sector move up and then this move up, yeah, RX will be a really good play. The other one is HIMS, HIMS, okay? The generic maker for the diet pills, boner pills, whatever. Very disappointing today. This is very disappointing to me, because I was saying on Sunday, you see this channel that's moving up. It does this instead. So Monday, you see this weakness. Not good. You see this? So not only it opened and then just went straight down, it tried to climb up, but it closed like this, right at the bottom here. So most of the time during the day, it would be like in the morning, it would try to at least touch. This one, no. So you could tell it's weakening. Okay. So when you're looking at the charts, like this is kind of where you have to be very skeptical at this point. And then here it drops, so it's not a surprise. Okay, am I gonna give up on it? No, because I'm already up 50 something percent. Like, so I don't really care. I'll give it more chances, but yeah, this makes you more skeptical, right? A lot more skeptical. And it's really dependent on this, the XBI. So the whole XBI, the ETF for the biotech, small biotech, it hasn't done anything since Thanksgiving. That's basically it. So from there, you see it's going sideways. So of course, it's really hard. So if the whole condition of the sector isn't good, it's definitely not going to be easy for any of those RX, HIMS, whatever, to move up. Now let's switch over to AI. Let's look at the AI stocks here. So AI, the C3.ai, so ticker symbol AI, had earnings. So it had earnings yesterday after the close. After hours, it was up 13%. And then it just faded. So the whole move got faded, and it was down a little bit. Then the pre-market happened. It just went down even further. So it opened here, right? It opened there. Like, that's about, let me see. Get my tool here. So it opened down like 12% about, right? Pretty bad. But then it rallies and goes up. This is what you want to see. When you see the initial reaction in earnings like this is what you want to see. So this gives me a lot more confidence. Now, am I going to add to it? Am I going to add to my position? Wait for tomorrow. I got to see that CPI. If that CPI is good, all right, I'm more confident. I'm more confident. Okay, so let's see what happens tomorrow. The CPI gets released, by the way, 8:30 Eastern. All right, 1 hour before the market opens. So let's see how the reaction is to that. If I'm happy with that, maybe, maybe I'll get more aggressive. Otherwise, I'm like I told you last week, I'm done doing big trades. Over. I just have what I have. I'll just hold what I hold as long as I can stand it. And I'm just slowly unwinding. But I might change my mind about the stuff I'm currently holding because, stuff like AI or sound right here, SOUN, RX, like these type of things. Yeah, I have very tiny positions. So it's not a big deal for me to say like I'll add it. So this is one of the things you got to really understand is how big are your positions and how big are they compared to like how big your portfolio is. And not even just that, how much you have in spare cash, because you don't want to take a big position in something, okay, that you feel is way too risky. Because stocks that move like this, like if you look back in the October streams, I talked about average true range. So if you have stocks that move up and down 10-20% like this, normally, like RX can easily do that. I probably wouldn't put big amounts in unless you're day trading, right? If you've got time, you could easily day trade this stuff, but this is crazy. Like this is just like I gotta like pay attention really badly, and I rather just swing it because I think it's a lot easier for me to say like there's a big swing from below 6 up to like maybe above 16 if I'm lucky, rather than try to like guess, okay, is today up, is today down, and then every day I would have to like monitor it, like trade it, because this is just like too crazy. This is schizophrenic. But this stock can be used for both. So you could actually do both. If you got the time, patience, and skill, yeah, you could do both swing and trade. So you could have one big fat position that you're building as a swing, and each day you're just day trading it and then taking some profit and putting it back into the bigger swing, right? Because the trend is going up, so you're going to be like, okay, go up, take some profit. I know it's go down, maybe I'll short it, right? And then get some profit, take some profit, go back long, go short, go long. Yeah, you could do that. It's volatile enough that you can. If you have that skill, yes, you can do that. So that keeps it very nice because then you only have to look at one chart. You know what I mean? So it's better than like, okay, I think most people are not really good multitaskers. All right. So if you have like 10 charts to look at with 10 tickers, that's already bad. And then here you're not only looking at like a single chart, but maybe you have to look at different time frames, right? So let's say I'm looking at the 1 hour here. So I can look at the 1 hour, and then I got to look at the daily, and then I got to look at the 3 minute, and then I'm going to look at the 30-second. Like, this already like 10-second, whatever, right? I'm going to go insane. And I have to do that for all like different tickers I'm looking at. No. So know yourself, know what you're capable of, and see what you can do. And I feel like when you find stocks like RX, they can be used for both. You can swing and you can day trade with it. So same thing with sound, SOUN or AI, right? You can definitely do it. So it keeps you looking at one ticker and focusing on one ticker, but then all your multitasking is the different time frames. Okay. So I don't know. That's something I think some people could probably do. I can't do that myself, but I think some of you might be able to. So just keep that in mind. You're trying to optimize your workflow. All right. So if you can, so to me, trading is like work, and you have to think of it like that. So that's why this is not something like, oh, this is exciting. Like, it's not like the movies. Okay. You see this guy in the computer making tons of money easily or something. No. Unless you got a bot, like you got a bunch of bots and AI and stuff that's doing it for you. It's not like that. It's going to be insanely bad. All right. So GameStop, I'm looking here. Okay. After hours up 3 point something percent. Okay. Not bad. But I was hoping for that short squeeze. Where's my promised short squeeze now? It's not happening. All right, let's go to China. Let's go to China. So we're going to play some videos about China here.
Asking myself, if I were involved in Chinese policy making, would I be doing this fiscal stimulus now before I see what President-elect Trump has in mind, or would I be waiting to see the details of his plan? Well, it seems that China wants to do this now. How significant is this announcement today, John?
I think it's quite significant. I think this is the clearest signal yet that the leadership has given here in China that they are ready and willing to do more to support this economy. The language that they use to describe monetary policy, saying that it would be moderately loose going into 2025, that's the first change we've had in about 14 years. And so the last time that it was described, monetary policy was described as moderately loose, was right in the aftermath of the financial crisis in 2008. So you get a sense of what the leadership sees before it.
John, is this more talk or is this walk? Is this just kind of, we're going to do this and ultimately investors can be disappointed? Or should I take this as a certainty that this is going to be delivered upon?
I think we should take this as the opening of the gates to more stimulus, that once the Politburo has said this, the Politburo is made up of the 24 most powerful politicians in China. So this is the political leadership saying to the technocrats, to the central bank, to the finance ministry, you should now go out and do more. We should expect more.
But John, can you explain, just to our global audience who maybe isn't following the story, to your point, this has been several iterations of that fiscal support. Why is this time different? What are they doing that's different that may stick?
So we've seen lots of things done sort of in a gradual way, nothing over the top, nothing, as people were saying, the markets wanted to see a big bazooka moment from China. We have not gotten that. This seems to show that the leadership has really had a mindset change. I think that has happened because the data that we've seen since the stimulus that was launched at the end of September going into October, that has not had the outstanding pronounced effect that I think the leadership was hoping for. I think that's why we are getting more now.
John, the way that this plays out in Europe, I mean, for many years, good news out of China has meant you buy basic resource stocks in Europe and you buy luxury goods manufacturers in Europe because you predict better things for the housing market, and the Chinese consumer will go out and buy more European luxury products. On the latter of those, is that still the case? We were having a conversation about whether the image of European luxury in China has changed because of geopolitical tensions. Would we expect this to be the same this time around?
I would expect that if Chinese consumers get more money to spend, they will go out and buy LVMH. They will go out and buy Gucci. They will go out and buy those products. They still hold a lot of cachet. Those companies are still spending a significant amount in terms of marketing. What has happened in terms of slowing growth in terms of luxury spending here in China is the property bust, the stock market being in the doldrums, people feeling poor, they are holding back on their spending. If what the government is doing now, or a signal is, if that can resolve that situation, signal it's going to do, if that can resolve that situation, I would expect a return in spending.
Nvidia falling more than 2.5% today after a Chinese regulator opened an investigation into the chipmaker for potential violation of the country's anti-monopoly law. This as China leaders promised more proactive fiscal measures next year to boost the economy. That sent shares of JD.com, PDD, Baidu, and Alibaba jumping 7% or more. For more on what the stimulus could mean, let's bring in CNBC contributor Dewardrick McNeil. He's the managing director at Longview Global. Dewardrick, great to see you. I first want to tackle this NVIDIA issue in the probe there. Let's be clear, is this retaliation?
Melissa, it will certainly be. China has spent a craft to these actions of people added to these lists after the U.S. has taken actions that China dislike. The perception will be NVIDIA was added to, or at least the investigation was announced under the anti-monopoly law after the U.S. last week tightened restrictions on semiconductors. We've seen this with Skydio after the U.S. sold drones to Taiwan. And so I haven't seen the details. There certainly may be some legitimate monopoly issues here. This dates back to a 2020 purchase of Melanos technology. So people will wonder, well, what took 4 years to get us here, lending more credibility to this being a retaliatory action versus one that's really based on the economic fundamentals of antitrust.
Dwarbrick, it's great to have you here. So on top of this, the Chinese are allowing their currency to weaken in a way we haven't seen in quite some time. And JP Morgan had a note out recently saying, you know what, to combat tariffs, that's exactly what they're going to do. So you throw that on top of this mix, and it feels like things will get a little dicey between the two countries.
Yeah, look, I think you're doing a great job here pointing out the depreciation of the RMB. The question becomes, how can you continue to do that and match? Let's say this gets up to 20 or 30%. We don't have to get to the 60% that Trump is talking about. At some point, you're going to create a situation where capital flight is going to become a real problem. You're going to hit the U.S. with currency manipulation, which is another tool in the U.S.'s toolkit. So I'm not sure that depreciating the RMB is the answer here to address Trump tariffs, but certainly this is something that we'll have to keep an eye on.
How do the fiscal measures that China says it's going to take next year factor into this whole? I mean, next year President Trump takes office. Next year, all of a sudden, they're going to have more moderate policy. That's no coincidence.
Well, listen, to be fair to the Chinese, they have been talking about the need to address domestic consumption. This is familiar to all of us here. Last Central Economic Work Conference last year this time, one of the top things on the list was address domestic consumption. This hasn't happened. And so what I say to people is the rhetoric is great. The policy that they're announcing, that they're going to put in place, we have to see what the details are. The diagnosis is right. The problem is correct. It's matching the policy solutions to the problems that you've suggested and implementing this in a way nationally that's effective. And that I have not yet seen. So I would take a cautious approach and say, let's wait on the details before we jump the gun here on them having finally decided to do something about domestic consumptions and to handle deflation. I don't know yet what the details will be, Melissa.
All right. Update on GameStop. We are up 12% after hours. So I'm waiting for Roaring Kitty, whatever the fuck his name is, to tweet, and we're on to the next short squeeze. All right, guys. So now this is beautiful for China. So if you're trading China, we got to look at gold. Beautiful gold. All right. So if you were with me on gold, you were trading EXK, right? EXK right here from $2, whatever, 5. Told you to get out. Antoine made some money off of this. Very nice of him. So now we've been staying in this range here. Now, stimulus. This is where it's going to be fun. If China is going to keep boosting its stimulus, I wonder where the turn will be. It could be now. We already hit a new low on the GDX ETF, the gold miner ETF, around mid-November here, November 14th. Would I recommend buying the leverage GXU now, hoping for a big move up back to the 60s or 70s area? I don't know. I'll have to think about it. But yeah, you're going to have to start thinking about this into next year. Definitely gold will be probably coming back into play. So we're going to rotate back into gold and silver. KGC is the gold mining stock that I'll probably play. So I'll add that along with EXK. So those two gold mining stocks. And I might, I might do GDXU if I feel aggressive, if I feel there's a good trend. But usually, like I told you guys before, the way gold moves like this, yeah, you're probably better off doing some options or something to do it, because it's too volatile. Like, it zigzags too much. I mean, I don't care if it's volatile, but it zigzags too much. That's why if you do leverage ETFs like that, it's like, nah, fuck that shit. Anyway, yeah, or you just get options on EXK or KGC or something. Anyhow, okay, let's look at the Chinese stocks. These are great vehicles for trading. So I used to play this a lot. And they still, like, potentially, pretty nice now. So TAL, GOTU, and EDU. Okay, these are great for trades. So this was like $2, $1.80 right at the low. $1. It looks like $1.65 for TAL, and it jumps up to like 9, 10. Comes back down to 5 something, goes back up to 14. This is great for trading. Now that we got the stimulus, ooh, yes. This could be very nice. So every time Trump says something about China and this crashes, you jump in. And then later there'll be another tit for tat, and then China will have to stimulate some more. And then you pump it. That's it. This is all going to be. This is perfect. And then you do go to. Okay, do the same crap. This thing goes up and down like a motherfucker. You go like for 60 cents, 4 cents, perfect. So these are great for trading if you want to, like, if you got time. But you gotta be on top of the shit though, really on top, because China, like I warned, most of the market action, right, happens overnight. Unless you could trade this overnight using a interactive broker's account. I don't know if EDU, GOTU, or TAL are tradable Robinhood overnight, but check it out. See if you can trade them overnight. It's better if you can, because otherwise you're going to get these huge gaps that you can't control for, because you're like, oh shit, it's gapped. It's gapped up, it's gapped down. Like, you can't, like, it's too much. It's too volatile, right, in that case. But if you get a nice trend going, though, that's not bad. Really not bad at all. And we'll have to see. We'll really have to see. It's going to be crazy with Trump and China going back and forth at it, but potentially you're going to get good trades off of these three. So those three are the educational ones. So that's mostly domestic, okay? And that's the thing. They're trying to stimulate the domestic market. So this is why I'm talking about these stocks in particular. And the other two are FUTU and TIGR. FUTU. Okay, FUTU is Futu Holdings. TIGR is Up FinTech Holding. These are like the Robin Hoods in China. Okay, so if they're trying to stimulate, and recently we had a lot of new legislation in China for stocks. Okay, like they're trying to promote stocks to the people as an investment, as an alternative to the real estate. So for the most part, the Chinese stock market is garbage, utter garbage. But so far, they've been kind of implementing a version of the 401k, they are really trying to get it up now. So before, they never cared, right, about the Chinese stock market. Now you're really pumping this up. So the Chinese stock market is their vehicle, their bubble machine. So I think they're trying to move people away from the whole real estate stuff. But still, they got to pump up real estate again too. So it doesn't matter. But anyway, most of them younger people in China, they can't afford a house. So anyway, I think this is mostly for them. So they're kind of, you kind of see the repetition, right? The repetition, like they're copying our playbook. Make 401ks, because they probably know that their social safety nets are going to run out of money anyway. They're totally dependent on the American consumer to keep their coffers flowing, and everybody needs to pump. That's it. That's just the capitalist way. So the bubble is bubbling, and you might as well take advantage of it. That's what I'm saying. So you see here on TIGR, you got like $3.50. You go up to 14. Perfect. That was a great trade. Now, you got this initial bump up from Sunday night. Now, would I get back in? I wonder. I really wonder. Yeah, so these first three I was talking about, the EDU is New Oriental Education Technology Group, GOTU is Guotu Techchedu. I don't know what the heck that is. All right, Tao Education Group. All right, so these three are a little bit more unknown quantities because they move on a different pattern. Futu, Tiger, they do their own thing as well. They have so those five though, however, those are the ones we want to focus on. And I always talk about KC because KC is kind of like it ignores most of the China stuff. It kind of does its own thing. It's more of like an AI software type thing, kind of like Reddit, I guess, in a way. Reddit or Asana or any of those cloud companies you see that I mentioned before. And then later on, we might expand our circle and get into other things like Baidu, Pinduoduo, like Temu, IQ, BEKE, maybe. But the first five I want you to look at are those five that I listed there, I talked about. And if I'm really confident in them, I'll talk about it more. Otherwise, forget it. It's too risky to play with Trump coming in. But if the risk reward is better, yeah, I'll mention them again. Okay. Now, let's see what other videos we got here. Let's see. Yeah, let's see. I gotta see what my list is. I'm not talking about China anymore. The dollar. Okay, I want to talk about the dollar. Let's talk about that. How about that? So I think when I was talking with Ryan, I mentioned that the strong dollar is bad for one reason. One of those reasons is the FX cost. So you have to understand that companies now in the US are actually multinational. Okay. So they're not only dependent on the money and revenue that is produced in America, but outside America. So when the dollar is too strong and they have to repatriate dollars to pay taxes or whatever, they get an FX cost, or they need to repatriate the dollars because, like, yeah, I got to convert my euros to dollars because I want to pay for some new factory in the US, or I got to pay more employees in the US, or I got to buy some real estate in the US, and I got to convert my euros to dollars. If the dollar is too strong, that's a bad thing. So you always want the dollar to be in a range, okay? Not too weak, not too strong. So I think this video will describe where being too strong is a bad thing. So hopefully you'll understand it. I don't know if they'll explain it well, but let's see.
From Oracle overnight, the strong dollar could have a significant impact on earnings going forward for any company that does business overseas. Our Seema Modi's been digging into that story. Morning, Seema.
Good morning, Sarah. Well, Oracle was sort of caught by surprise by the surging U.S. dollar, which has gained about 6% since early October. CEO Safra Catz said the dollar's rise caused a 3% hit to its third quarter outlook and a 2% impact on revenue. And the higher the dollar goes, the bigger threat it is to large cap tech companies. Goldman Sachs highlighting the companies that are vulnerable to a stronger dollar by calculating their revenue exposure overseas. Meta, Netflix, Alphabet, Electronic Arts are among the companies high on the analyst list. A strengthening greenback, we know, makes it more expensive to convert overseas profits into dollars. Semiconductors, on average, generate more than half or more of their sales outside the U.S. Analysts calling out a number of chip equipment players like Applied Materials, KLA Tencor, and On Semiconductor, which are seen, of course, as more exposed as well to tariffs. These stocks have underperformed since the U.S. election, as has NVIDIA, which works with all of these companies. David Costin at Goldman, he asked that during the prior trade conflict, which really took height in 2018, domestic-facing and defensive industries, utilities, real estate, consumer staples generally outperform cyclical industries with that elevated international business exposure. So this is certainly going to be a talking point next year, guys.
Yep. Okay. I think you kind of get it. You kind of get it with my explanation with that video. You see, like, yeah, you don't want the dollar to be too strong. Okay, so let's move on to NVIDIA and China. So we got some couple of ones with NVIDIA and China. So that's a kind of a good segue, I guess.
Let's get more now on NVIDIA and the move in semis today with our Seema Modi. Hi, Seema.
Hey, Scott, you touched on trade and geopolitics. With China's investigation into NVIDIA's anti-monopoly practices is widely seen by the street as a negotiating tactic. It comes 1 week after the U.S. Commerce Department hit Beijing with new export controls that takes aim at the broader semiconductor industry. The Council on Foreign Relations fellow David Sachs says by launching a probe into the most valuable company in the world, China is signaling that it can inflict pain on the U.S. and if President-elect Trump decides to levy tariffs on China. In terms of market share, China is an important market. It makes up less of NVIDIA's total revenues today, which at one point were around 25%, Scott, now closer to around 10 to 12%. That's according to analyst estimates. Shares of NVIDIA, along with other chip stocks, are trading lower today on this news, and worth noting, have underperformed the broader tech sector since the U.S. election, Scott.
Thank you. That's Seema Modi.
All right, that was pretty short. All right, let's see what the other one is. I think the other one was longer.
Is related to the 2020 acquisition it made of Mellanox Technologies. Shares are down over 2% right now, but give us some mean for NVIDIA.
I mean, when I look at NVIDIA, they've already gotten a subpoena from the DOJ about, a potential monopoly with the chips, and they do have a 90% plus share when it comes to the accelerator market. And given, what's going on with Google here in the US, I'm not surprised the Chinese antitrust authorities feel they have to do something about businesses that operate here. And one of the biggest businesses that operates there among the US companies is, NVIDIA with their chips. And look, when it comes to chip making, NVIDIA clearly has an ecosystem effect that, once you start using their chips, it's hard to mix and match. You can't really use an AMD or, an Intel to train your AI. If you are an NVIDIA shop, and, right now we are in a supply constrained environment, so NVIDIA can say this company will get the chips, some other companies may not get the chips. And I think there are grounds for any antitrust authority to say we want to look into their practices.
Grounds, but isn't it stupid? I mean, there was a great New York Times expose about how NVIDIA basically sells so many products to China, even when it's not allowed to. What if NVIDIA just said, okay, we won't sell any more stuff to China?
Well, so again, I don't think the Chinese authorities want their companies to be deprived of, the chips that NVIDIA is selling. It's more about the practices. And they did the same with their home companies. Alibaba and Tencent had a similar investigation where they had to make changes to their practices in terms of how they operate. So look, when it comes to antitrust, there are two big authorities in the US and in the EU. And the Chinese authority wants to send a message that they are as powerful, when it comes to these things as the other two. So.
Yeah, very powerful. Now, what's up, Kimmy? All right. Let's see. I think that's it for that NVIDIA. I mean, what I'm gonna do now is switch over to this quantum computing stuff. So I talked about some of those quantum computing stocks that jump up like 50% or whatever. Here we got some quantum computing from Google.
Shares of Google jumping today after announcing that quantum computing breakthrough, saying that its new chip, Willow, can perform a milestone computing task in just 5 minutes and would have taken a classical supercomputer longer than the history of the universe to do. Our Deirdre Bosa has that story for today's Tech Check. This is a big talker today, Dee.
Hey, good morning, Carl. So certainly a lot of excitement in the tech world over this breakthrough and what it could mean in the future, from lending credence to the idea of a multiverse, to decoding the origins of life, to breaking Bitcoin encryptions. With a very large caveat, though, these big moonshotty applications, they're still many years away, and they require yet more breakthroughs. What Google was able to do with Willow, this latest quantum chip, is reduce errors as they scaled up using more qubits, cracking a key challenge that the field has pursued for nearly 30 years. They did it through random circuit sampling, which has no practical application. But Google's VP of Engineering, Hartmut.
Oh, actually, yeah, Kimmy, I was talking about gold and silver. So you and Bitcoin. So you can go back to the beginning. Yeah, I was recently talking about gold and silver. So I'm definitely going to be talking about them again with the new Chinese stimulus. So that's in relation to China, okay, the silver and gold trade. And then, yeah, at the beginning, I talked about Bitcoin. So, yeah, gold and silver, I definitely will start talking more about it again. So I haven't talked about it since like probably the summer. And actually, you know, I was, even before I came on these shows on John's show or whatever, I was talking about it since last year, silver and gold. And you know, they go in cycles. So when they pump, yeah, they pump, but then they do nothing, and then you wait for it again. So Bitcoin is more a priority, and small caps. Then we'll talk more about gold and silver in the coming weeks as we get closer to New Year's. And I think, yeah, once we get to like the first week of January, definitely it's gonna be more interesting. Yeah.
Circuit sampling, which has no practical application. But Google's VP of Engineering, Hartmut Naveen, tells me that this is essentially an entry ticket. If you can't win decisively on any problem, he says, then you can't win on a useful problem. So in other words, Google's quantum breakthrough is a critical step toward getting to practical applications. When I pushed him on when that would be, a year, 5 years, 10 years, he said, let's resolve to talk again in the near future. Now, shares of Google is up more than 4% today. It's one of the best S&P performers as the tech world and Wall Street alike cheer this breakthrough. Elon Musk responding to Sundar Pichai's post about the breakthrough on X with a wow. And then there was a back and forth between these two on a potential quantum space collaboration. Piper also Alphabet a top pick this morning, which all stands in contrast to the lowest forward PE multiple of all the mega caps, pressured by government lawsuits and its innovators' dilemma in the age of Gen AI. But despite that, investors might want to note that it is a leader in the most emerging and promising technologies, that being generative AI, autonomous driving, and now quantum computing. This year, though, investors have rewarded the smaller players in quantum computing, like D-Wave, which is up more than 400%. Its market value about $1 billion. I spoke to the company.
All right. D-Wave. Yes. QBTS. I mean, did I put that on the dang list of stocks on this banner right here? Like, oh, man. Did I put it in there? All right. Let me see. Let me see. I think I did. Yeah, I did. I added it some time ago. Yeah. All right. Yeah, you can see it on the screen at the bottom scrolling. You'll see QBTS. You'll see QUBT, you see IONQ. So those are the three speculative quantum computing stocks. Very speculative, very volatile. No, I mean, seriously, I personally wouldn't play it. I don't, but hey, you know what? You know what? They're definitely good for trading, at least. Now, if you think these things would actually go further than this, we'll have to wait and see.
Company CEO Alan Baratz, who described their process, known as annealing, which is different from what Google is working on, as quantum for optimization. It may not ever be able to explain life's mysteries, as Google is setting out to do, but this kind of quantum computing can be put into practice now for things like supply chain management. Here he is on the difference between quantum and generative AI.
If the market is following a trend that's been followed before, AI will predict it well. If there's a discontinuity or a black swan, AI is not going to see it. It's not going to be able to compute it. So, you know, that's where quantum really shines, is in computing solutions to problems where the solution has never before been computed.
So all of this basically just to raise the prospect that quantum computing can one day be as transformational as generative AI. And we've certainly seen the kind of transformation that's brought just in the last 2 years alone.
All righty. All righty. Now let's go look at the presentation.
Introducing our latest quantum computing chip, developed to learn and evolve like the natural world around us. Willow, from Google Quantum AI.
Hi, I'm Julian Kelly, Director of Hardware at Google Quantum AI. And today,
On behalf of our amazing team, I'm proud to announce Willow. Willow is Google's newest and most powerful superconducting quantum computing chip, and the next step in our path towards building large-scale quantum computers and exploring their applications. I've been fascinated with quantum computing since I first experimented with qubits in 2008. And since coming to Google in 2015, it has been a dream to make our mission a reality, building quantum computers for otherwise unsolvable problems. We launched our first chip, Foxtail, in 2017, followed by Bristlecone in 2018, and Sycamore in 2019, which powered our milestone 1, the first quantum computer to surpass the best classical supercomputer on a computational task, random circuit sampling. Over the years with Sycamore, we have been able to squeeze a remarkable amount of performance from our hardware, including achieving a scalable logical qubit in our milestone 2. But we've ultimately been limited by quantum coherence times, the length of time qubits maintain their intended state. With Willow, we've made a huge step forward. We've increased quantum coherence times by a factor of 5, going from 20 microseconds in Sycamore to 100 microseconds in Willow. And we've accomplished this all without sacrificing any of the features that made our systems so successful. This advancement was enabled by our new dedicated superconducting quantum chip fabrication facility in Santa Barbara, one of only a few in the world. And we're seeing exciting developments coming from Willow, which has already surpassed Sycamore's breakthrough demonstrations. Our logical qubits now operate below the critical quantum error correction threshold, a long sought-after goal for the quantum computing field since the theory was discovered in the 90s. And we've achieved it for the first time with Willow. Errors are exponentially suppressed in our logical qubits, as error rates are halved each time we add physical qubits and scale from distance 3 to 5 to 7 surface codes. Additionally, our logical qubit lifetimes are now much longer than all of the lifetimes of the physical qubits that compose them. This means that even as we make our quantum chips larger and more complex by adding more qubits, we can use quantum error correction to actually improve their accuracy. We've pitted Willow against one of the world's most powerful supercomputers with the random circuit sampling benchmark. The results are pretty surprising. By our best estimates, a calculation that takes Willow under 5 minutes would take the fastest supercomputer 10 to the 25 years. That's a 1 with 25 zeros following it, or a timescale way longer than the age of the universe. This result highlights the exponentially growing gap between classical and quantum computation for certain applications. Let's talk about the hardware approach we've pioneered at Google Quantum AI that makes these things possible. Our tunable qubits and couplers enable super fast gates and operations to achieve low error rates, reconfigurability to optimize hardware in situ and run multiple applications, and high connectivity to efficiently express algorithms. We leverage this tunability to enable reproducible high performance across the device. Let me explain. A challenge in superconducting qubits is that not all of them are created equal. Some are outliers with uncharacteristically high errors. But here's where our tunable qubits really shine. We're able to fix these outlier qubits by reconfiguring them to perform in line with the rest of the device. And we can go one step further by having our researchers use tunability to continuously develop new calibration strategies that push errors down across all qubits with software. Let's quantify this and nerd out for a minute on quantum computer tech specs. We have number of qubits. Connectivity is the average number of interactions each qubit can perform with its neighbors. We quantify error probabilities for running simultaneous operations. Single qubit gates, 2 qubit gates, and measurement. Coherence time measures how long each qubit can retain its information. Measurement rate is how many computations we can run per second. And application performance is a full system benchmark. Willow hits a sweet spot across the full list. It has a large number of qubits with high connectivity and can run diverse applications. We measure low mean error rates across all operations, with multiple native 2-qubit gates. We have greatly increased T1 times. We have very high measurement rates, and Willow is below the error correction threshold and performs random circuit sampling far beyond what is possible with classical computers. Looking to the future with Willow, we continue our journey towards building large-scale and useful error-corrected quantum computers that will push the boundaries of science and the exploration of nature. With future commercially useful applications in areas like pharmaceuticals, batteries, and fusion power, we are excited to solve With future commercially useful applications in areas like pharmaceuticals, batteries, and fusion power, we are excited to solve the otherwise unsolvable problems of tomorrow.
All right. I mean, if you didn't take electrical engineering, even if you did take electrical engineering, I don't know how many of you actually know, actually took courses on quantum computing or even quantum mechanics. Like you got to know a little bit about both to do that stuff, and information theory. So, wait, I was a young genius. Yeah. I don't know. The people working at Google are crazy. They're crazy. I mean that will explain a lot with Intel, right? You know, you see Intel, they don't got the talent. That's really a big problem. But yeah, Kimmy, you can go to the description. I always list out all of the videos I play with the links, so anybody can just rewatch them. So yeah, but I think if you want to start learning something, learn information theory. Information theory is really good to study. It's like, oh man, I mean, Claude, I don't even want like talk about it right now, but you should look up Claude Shannon, okay, the father of information theory, and once you understand that, the basic groundwork, then move on to talk about quantum mechanics, all that. It's just like, it's abstract, okay? The information theory is the abstract idea of, I think, the universe itself. Like, if you think everything is transferring information, I talk to you, you hear sound waves, right? And then, now we use computers, right? We type, it goes through ones and zeros, it goes through here. Now we're doing the quantum computing stuff. Ooh, this takes it to the next level. Okay, because like I can change like a spin on an electron, and then another spin on an electron will affect somewhere else like billions of miles away. Now, if like this, the quantum computing stuff is like just the beginning of it. And he was talking about error correction. So if you look at Claude Shannon work, it's like error correction is a big important problem. And quantum computing, the reason why we haven't done it yet is because it's not predictable. A lot of, like, you try to do 1 + 1 = 2, right? And then you have some solid snake or or that hustle and flow guy, right? Like, or something that's go 2 × 2 = 5 or something. Like, okay, see, so you got to error correct all that away. Okay, so like this is why things are unpredictable. So this is where it's really cool. This is really cool stuff. So look up Claude Shannon. Information theory. That gives you like the framework to understand like the later stuff. The other stuff is just the implementation of the ideas, So just learn a theoretical framework of things. So it's pretty cool stuff. It's gonna take a while to get there though. But I think you see the stocks are pumping. So if you were in these stocks here, it started with IONQ. IONQ had an announcement for government funding around September. And this thing started running. Okay. This stock started running. So it's been running since about $7 now. It hit the top of like 38 about, and then these other little guys, smaller quantum computing companies like Qubits, you saw that CEO with the messed up facial hair. Yeah, D-Wave Quantum Inc. QBTS. Okay, so this thing started running since the election, right? So, they follow. They're just following the trend because that's just how it is. I can't really recommend it. This one was like 0.7, so 70 cents to like 9 cents. So this is Qubit Quantum Computing Inc. I'm not recommending you to buy them now or whatever, but I'm just saying, this gets a lot of hype going because IONQ started it before the elections. So the quantum computing hype has already been happening in this stock right here. So they're just following what's been set. So this new announcement by Google definitely sets the stage. I can't guarantee what's going to happen next year for these stocks, but I would say, like, if you have patience, you might just keep them on your watch list and see what's up, because they make these nice bases and they jump, but are they completed? Are these completed bases? And then QUBT is an older stock, like the other one's newer. So, just keep them on your mind. Yeah, it's kind of like those marijuana stocks and whatever. They come and go, right? They have seasons. Is it a season for marijuana stocks or not? Like, let's look at that, right? So they had their seasons, but then they just crap out. So are they going to have their seasons again? We'll see. But that's why I'm looking at these psychedelic stocks, because I think they have a better chance than marijuana. So they'll have their seasons. These are very speculative type things. They won't necessarily go anywhere, but you never know. It's kind of like Rocket Lab, right? You buy this stuff, it's like, it's very speculative, and then it pumps and you get really nice moves like that. So you look at the bases like here, Rocket Lab, and Martin Shkreli, he just bought it up here, right? Because he took a bet with his chat, you know what I mean? So like, we'll look at Lunar. Oh yeah, I forgot to mention PL, like Planet Labs had earnings. So it dropped here, right? So it's trying, I guess it retested that support level at 3.3. So we'll see if this continues on next year. So we're gonna see. Shrooms greater than weed. Yeah, shrooms are better than weed. Yes, they are, and that's why I'm looking highly into that stuff and those companies. And we'll see if it works out later, because I think we'll have a big push. Like we'll have to wait for tomorrow, okay? Like wait for CPI, and then Jerome Powell will talk again next week on the 18th. Then I'll decide if it's really like worth pushing. Like it's a push, okay? You're at the table, you're playing poker. Like, I don't know, it's just like you got to see what you're doing, because I'm not gonna put more into a bet until I see a better conditions. Because we're heading to the New Year's. I told you guys, going into New Year's, you're just not gonna do anything too drastic. You're not going to change what you're doing too much at this point. It's already done. Most of the easy moves were already done, right? Okay, I think I have a home builder. I mean, this is going to be, I guess this is going to be more boring, since we're talking about like damn quantum computing. So this is probably when we're talking about home builder. Well, this is the last video I got to talk about, because it had earnings recently, this home builder here, right here.
Thank you very much, first of all, for being here in person, because like in real estate, it's all about location, 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 right? So let's talk about Toll Brothers. Yeah. It's been a dazzling run, medium to longer term, for many of these home builders. Is there any reason to think that the Toll Brothers results we got could be a change in catalyst, or are we reading too much into it?
Hey, Dom, thanks for having me. Look, it was a great quarter across the board. I mean, they beat across key metrics. I mean, orders, deliveries, ASP, margins, EPS. Everything was great. To your point, what people are a little bit nervous about today is the fact that the outlook on a full year basis was pretty good. Gross margin maybe a little light, but the first quarter outlook in particular was a little bit light in terms of deliveries and gross margin. But here's the key. They have beaten 8 consecutive quarters of their gross margin guide by 90 basis points on average. And then in terms of deliveries, it's 9 consecutive quarters by an average of 6% at the midpoint. So the guidance is conservative, and you know what, rightly so, given that there is still some uncertainty in the market.
But Toll's also a very specific home builder for a very specific and distinct part of the market there. And then it's kind of more skewing towards the higher, or middle to higher end of things. Does it say anything to you about the state of the housing market if we are seeing that kind of reaction from investors from a certain side of that market or a certain spectrum in price?
I think we might be looking a little too deeply into it, right? The stock's up 50-ish% year to date. It's had a nice run. We would argue, and this is a conversation for another time, but valuations need to re-rate in this group, and it's well overdue. But for Toll specifically, yes, they play a little bit at the higher end. But keep in mind, they have been migrating down, right? About 50% of their orders are on spec at this point. So they're starting the construction before there's a buyer in place. And so they've gravitated a little bit more towards the kind of mid and even to the lower end to some extent. So I think, look, they're saying that demand over the past 6 weeks was very, very strong. That's a good read for everybody.
All right, macro-wise, if we could just kind of go up a little bit more up that spectrum here to the funnel, is the state of the U.S. housing market by the companies that you cover in a healthy spot? And by extension, how predicated is the outlook for that housing market on a Fed interest rate easing cycle?
Yeah, tricky question. It's a tale of two markets, if you will. The existing home market is being impacted by that lock-in effect of higher rates. So we're at GFC levels of existing home sales. Now, what that has done is set up the stage for the new construction builders, the home builders, to come in and fill that void. And they're able to do so because they can offer things like mortgage rate buydowns and things of that nature. So the underlying demand is incredibly strong. If you have the ability to actually help that demand along, things are going very well. So I think the setup for the public builders and new construction is incredibly favorable.
And before we let you go, John, your top pick at UBS when it comes to all the home builders you cover?
D.R. Horton at this point, they really cater towards that first-time entry-level buyer, consistent executor, largest builder by 15% in terms of deliveries.
All right, so home builders. Like I mentioned this before, right? ITB, I said I wasn't confident either way, either direction. It's still going sideways. You see that? So after that, earnings today on TOL, Toll Brothers. You see this one? Yeah, so see? No, there's no trend right now. We are trendless. Like if you look at the long term, like you see this thing moving up. These were great buys in July. That's when I was on Grace's channel. I was telling people to buy it, on those late night streams. Probably nobody listened to me. And then, here, October, great time. Again, here you can hit this support here, October 2022. So that's 2 years ago, right? And like again. But here, you see this, there's a lot more weakness here. So again, no. So even though like interest rates are dropping, it's kind of like maybe this whole move here, because you have to remember interest rates didn't drop yet, right? Like Jerome Powell is still raising rates, but the anticipation of him stopping and then lowering rates had this huge move up here. So that's what you got to understand about the market is like it's an anticipatory machine. It anticipates things. So things will move ahead of what things really are. That's the same thing with gold too. A lot of people go like, oh, gold should go up because we have high inflation. Actually, gold went up ahead of inflation. Gold was already ahead of everyone else 1 year ago before inflation started kicking up from COVID, right? So it already knew, oh, Jerome Powell's pumping the printer, and then gold started spiking, and then it was like, oh, yeah, gold already saw inflation coming because of what he did years before he did it. So the thing is, like the same thing with the home builder stock, I kind of feel like, I mean, maybe it could still go up because I think housing prices will continue higher because, again, when the interest rates will drop, it's just like these housing prices will continue to go up. But what I worry about is that the move is already done. Like the people that expected this to happen are already in. There's nobody else willing to buy home builder stocks at a higher price. That's the problem. So if that's the case, then forget about this sector. This sector is done with. It's better to focus somewhere else. So one of the things I try to say is you got to rotate, rotate, rotate. Things don't go up all the time, right? So you have to find the new hot toy. And Home Builders was a very good one to play. And I think maybe this is the end of it. Once it breaks down here, it's done for. It's going to go back all the way down. So that's it. This could be it. This could be the end. You don't know, but yeah, that's something to think about. It's kind of like Moderna, right? Moderna, right? You got like this is a big one. This is a big fall from grace. Like you got that whole COVID bump. You just go on the anticipation of COVID vaccines. You hit the news that the vaccine is happening, right? And then you get this little extra bump on the sales, but after that, it's just crash, crash, crash. It just falls all the way back down. It's just it. You got to be at the right point in time to take advantage of the cycles. So that's another thing, we have to focus on the psychings. Yeah, the housing market itself will still go up, HB. So I recommended, some people were asking me when should they sell their house. And when I told them was that based on the 18.5 year cycle of real estate, the peak for house prices will be somewhere next year into 2026. So if people are looking to sell a house, this is the perfect time to sell it between 2025 into 2026. That's where the peak will be. After that, it's coming back down. Now, because we're looking at the stock market will anticipate that peak. So this thing, if this whole sector here, the ITB ETF is going back down, it's probably projecting the fall of prices, housing prices, a year or two ahead of time. So this thing was already moving up a year or two ahead of Jerome Powell stopping interest rate hikes. And now you're seeing it like, yeah, you see that's what it is. It's like everything moves in cycles, delayed or pushed forward. And so it's not coincident, okay? I'm using the word coincident. So look up your vocabulary. Everyone keeps thinking like, oh, if this happens, this should happen, like at the same time. No. Sometimes you see this, markets will move in anticipation of something will happen. And this is what we're seeing here. I think when you see this moving down, I think, yeah, this is a signal that housing prices are probably going to peak within the year or two, okay? And that would match up with the 18.5 cycle. Now, there's another cycle called the 41-month cycle for the stock market. And we'll talk about that another time. All right, we'll talk about that another time. And I think that time will be coming soon. So when we get to New Year's, get closer to New Year's, I'll be playing videos about that 41-month cycle and things like that. So you'll see. So I think this is very important that you understand. Yeah, the things don't move at the same time that you think they should. So that's why I always keep hearing the same people screaming about gold. Inflation is high. Gold should be going to the moon. Gold already did its move. And here, let me end this stream with this one. I'm going to talk about the gold. I've showed this before. The gold to oil. So gold will also predict what oil will do later on. Let's see where. Oh my God! I got to organize this thing. Okay, let's see. This one. Okay, this one. I got to organize this stuff, man. Okay. So, crude oil follows gold, shifted 19.8 months. So let's see. So the top line is oil. The bottom, like green, red kind of thing here going is gold. And I pushed it up 19.8 months. It's so interesting that gold like predicts it pretty fairly well. Like this is amazing here. Like I don't know how gold predicted Ukraine and Russia going to war, right? But look at that. It's gold when gold spiked and I push it up 19.8 months, oil spiked just around that same area, right? Now, what gold is telling me here is that starting in January, we're going to have like a sideways move. And look at this. We're already sideways. Okay? So this thing predicted that oil should move up right now, but as you can see, it's not. So what that tells me is that like any weakness in oil from January to May, buy. Like I'm not saying buy crude oil, but I would say like buy a bunch of oil companies. Okay? Because supposedly we should be going up here between August and January, but it hasn't because China's economy is still crap. And so the demand for oil still is not projected to go up. But I think that will shift right here. So I think with the new stimulus news in China and the projected weakness we'll have from the January into June before we start moving up again, this is just what gold says. I'm not saying it's going to be certain, but as you can see, I think this point here, you should start thinking about oil stocks. And you got Trump too, right? So that should automatically be bullish. So yeah, just pay attention to oil stocks, and also natural gas will follow too. So natural gas stocks, watch that. And let me look at natural gas right now. So it keeps dancing. See, it's stuck here. I can't short it. I can't long it because there's no trend right now. So I don't know what it's doing. It could just go sideways forever until January. So man, yeah, I don't know. So I don't have any predictions on this natural gas right here when it's doing this. So maybe I'll change my mind on Thursday or maybe next week. But no play. Usually, like, I would do cold or boil, but this time around, it's just like, well, it's just moving up and down. So I can't recommend either of those ETFs right here if you want to trade. But I will talk about gasoline, though. Gasolina. So UNG is the ETF for gasoline. So we're almost mid-December. And usually mid-December into January, gasoline pumps. That's just a seasonal thing. And maybe one day I'll talk about seasonality and versus cyclical nature. So the cyclical stuff you saw, like I'll talk about housing, like there's seasonality, right? Okay, there's travel season, right? Okay, it's the holidays, you travel more, this and that. That's a seasonal thing. So you have to go with the trades on that. So usually for gasoline with the travel, it's going to have a temporary pump, and sometimes they're big, like let's look at this one. So last year, mid-December to January, that was a 50% pump on gasoline prices. So even though crude oil is down, you might see a pretty good pump on gasoline. I don't know if it's going to be 50%, but yeah, UNG might be a pretty good play mid December into January until New Year's, basically, and then you'll get out. So for a quick trade, that's fine. So yeah, a lot of this stuff is just strategy where you go like, okay, I see something, I see a pattern here, I see a cycle, and then you play it. Or here you see a seasonal pattern, like, oh, it's summer travel season. Oh, it's Memorial Day, pump, or this. Yeah, you know what I mean? So it's always something like that. You can always play these things. It's pretty easy. December, yeah. Yeah, we'll see. We'll see, HB. I don't know. I'm just recommending it because the cycle guys were showing that usually this trade is very easy. Like basically, like it's very consistent. Easy in that sense. It's not like easy as in, oh, it's always going to give you a lot of money, but it's just like, oh, it's consistent. It's consistent. As long as it's consistent. It's kind of like, yeah, if I short natural gas mid-December, it'll be the same thing. It's consistent. It's consistent. That's it. Doesn't guarantee like, oh, yeah, I'm going to make big bucks on it. So, yeah, anyway. So GameStop was up 12%, and then now it's just up like 2.61%. This is so lame. Like, where is Roaring Kitty? Roaring Kitty needs to come in and pump this crap. Cause like, come on, man. Anyway, it's probably gonna be like doing nothing, I guess. Oh man, I'm gonna be dependent on CPI tomorrow morning. That's how it's gonna go, huh? So yeah, okay. Remember, guys, CPI is tomorrow morning. We're gonna have CPI. It's 8:30 Eastern, and then on Thursday we'll have PPI. I think we'll have PPI Thursday. Let me see. Let me double check that. And once you get those two pieces of data, then you can guess what Jerome Powell is going to say, because that gives you, yeah, Thursday will be the PPI. So Thursday 8:30 you'll get the PPI. Once you get those two pieces of information, then everybody's going to wait for what Jerome Powell will say on Wednesday, and Jerome Powell will be talking. Let's see. I think it's 2:30, right? Yeah, he'll start talking yapping 2:30 December 18th, and that's where everyone's going to be trading around, and that's it. And then we're going to be going on into New Year's. Okay, so that there's not many trading days left. I don't like to overtrade during the December months. It's like you should have made all your money, most of your money in November, like October into November, and then now it's just like waiting until New Year's, and then once you get into New Year's, then we can decide what we want to get aggressive on. But like I said, if I see a lot of good movement in biotechs, small caps tomorrow, I might get more aggressive and add to what I left over, like RXRX, SOUN, AI, what else? HIMS, HIMS. Like, yeah, if I feel like it, I'll get aggressive and start adding to it if I see pretty good action tomorrow morning. So yeah, watch 8:30 tomorrow morning, see what it does, and then we got to wait for Jerome Powell. The danger, though, I would say, is that you have options expiration next week on Friday, and it's triple witching because it's the third month, right, of the quarter. It's December. It's the last month of the quarter. That's when all the action happens. So I wouldn't be surprised to see a lot of volatility. It shouldn't be a surprise to anyone. So after Monday, essentially starting from the 16th. So after Monday, I would assume Tuesday, Wednesday, Thursday will be the most crazy months. Most crazy days. And that may last into the 23rd before Christmas. Okay. So usually the Monday after a big options expiration week, you might see a lot of volatility up until then. And then everyone's just going to be chilling out Christmas, and New Year's, because most people are not working, and there's nobody trading at this point. Anybody that's traded, they already traded. Nobody's going to do shit. So if you expect any kind of volatility after the 23rd, I don't know. I don't know what to tell you. Yeah, that's not happening. It's not happening. Unless there's like a crazy World War III or some crap like that. All right, that's not happening either. But we'll talk then. Okay, we'll talk tomorrow. If something really crazy happens, I'll try to be here early in the morning. But if nothing happens, then I'll just be in the afternoon. All right, guys. All right. See ya.
Feel like I should, feel like I should, feel like I should, feel like I should go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should. like I should go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should, feel like I should go.